everyone, Kim here. Today is January 12, 2018, Friday. As I record this video, market should be open another hour or so, so you should be seeing some flashing lights on your left. Good to be back. Thank you very much for your patience. I've been, not so healthy last week or so. Got to -10 Fahrenheit around New Year's here in Minneapolis, and it stayed like that for a while. And I shouldn't been hanging out too much. I was forced to stay home New Year's Eve because I started getting sick on New Year's Eve. But and then I pretty much that whole New Year's week was a tough week for me, but I'm feeling 90% good and back in the market. Obviously I've been looking at the market every single day. I just wasn't able to come to you guys with the video, so it's good to be back. Thank you very much for your kind words and support and nice words through email and comments on YouTube and Twitter and stock twits. It's very it's very nice to hear that you guys appreciate what I put out, and that kind of gives me motivation to continue to write articles and upload video like this, and and they're different people with different motives, but when I put out videos and put out articles and stuff like that, I truly want to inform you. And especially like when I wrote articles the other day, the article, when others are when others are greedy, be fearful when others are greedy. I mean, like just writing it, editing it, proofreading, and publishing it takes about an hour. That's our job. And also like uploading a video like this, I mean, I gotta upload, I gotta capture it, process it, and it takes time to process it into a file, and then uploading it on YouTube. And then I've been uploading it 1080p HD, so you can watch it on large flat screen TV, and it's gonna be HD. So I've been uploading it, and that takes a long time as well. So it just takes a lot of effort, but I do it for you, and I like sharing, talking about. I'm such a nerd when it comes to technical analysis. So like any nerd or geek, you want to talk about it. So I enjoy doing it. So I'm glad that I'm back to you guys here. Like as I promised, let's look at some of the long-term picture. Obviously, we are at a level that we haven't seen. Let's talk about this here for a second. And I'll talk a lot about here. This was the chart that you saw in my article, right? The be fearful when others are greedy. And obviously, if you just look at this chart without actually reading my article, you'd have thought that I'm calling for a crash. I am not calling for a crash. I am calling for a correction. What I'm also saying is this. Okay, looking at the Dow Jones Industrial Average, this is a monthly chart. And in last 50 years, this is the first time seeing this kind of a buying pressure, right? What it means is this kind of buying pressure only happened once in 50 years. Can you really bet on that? If anybody made money going long on the market just in January and December, they got lucky on their last hand. That's what it's telling us. Like, what I'm trying to say is, we're probably not going to see something like this happen in a long time. Because do you remember back right here in 1983-ish, 1985, right there, you see that arrow? That right there was the first time, in a while, right, as far as I can go, in 1985, where we hit that new all-time high. We haven't seen that for another 10 years. Then when it came 10 years, this was right here. So we haven't seen that kind of a buying pressure. Actually, this is lower. Actually, we haven't got to it. You can see this is coming from here. Here, let me zoom in. We actually didn't get there. We actually didn't see it. You see right there? This, we still didn't get there. So actually, technically, statistically, we didn't get to the same sentiment until today. We got above it now because this was even shallow. It didn't go as high as this one, like what happened in 1985, 1986. So 1985, 2018, right? So that's what? That's 5, 10, 30, 33 years. So in 33 years, we haven't seen similar buying pressure. Can you bet on that? See, that's the problem. Let's just say there's any new traders coming into the market. And I say this in exhortation, in admonition, not to make fun of you or put you down or anything like that, or burst your bubble. But this is what's going to happen. Let's just say that you just came in the market, like in December. Like, let's just say November, and you've been making some good money November, December, and January. So what happens is the market kind of condition you in a way that, well, this is easy, like, oh my gosh, so all you have to do is just keep buying the dip, like market, oh my gosh, I cannot. And so now you think that market is easy, now you think that this is always going to be, and then you ask all your friends and family, and you start selling your farm and your mortgage, and then you think that you can make millions in the market. Well, here's a news flash. Well, sooner or later, market will crush you. And that's how you learn, though. If you really talk to real traders, real investors, that's what they will tell you. You know what I'm saying? The market will knock you out. And market will just punish you for thinking that just because you got lucky in the last couple of months, that you think that you can do this for the rest of your life, living a millionaire lifestyle. So, with this statistical probability, we have not yet seen like this buying pressure until today. And that's roughly in what? 30 years, right? 33 years. But this right there, we have not seen this kind of buying pressure in 50 years, because it's now in 50, as far as I can go on my chart, maybe more than 50 years. 50 years. So if you are betting on something that happened once in 50 years and 30 years, that is very low probability strategy. You see what I mean? So this is a time you want to be defensive, but at the same time you want to give benefit of doubt. So how I've been approaching it is I've been closing out a lot of my call options. And if you trade option, you know that those options move so fast when the market rips like this, right? But I hold multitude of stocks in my portfolio. Those are long-term investment stocks that I've been accumulating since mid-2016 and all throughout 2017 buying the dips. That includes Twitter, which I wrote an article about, Intel, and some other ones. Also have a pretty heavy size in MGM, which is all in my blog that I did a stock pick up, 3 stocks, Intel, Texas Instrument, and I think one of the other, I forgot the other one was, but so this is a level that you want to be fearful when others are greedy. As far as like a long-term picture is concerned, here, let me go to this chart right here. This is the S&P 500 index weekly chart. You can see it made a new all-time high on this chart. This is a weekly chart on the S&P. I think today we are in optimism phase, right? Do you guys know how bull markets are born? So basically, the bear markets, they die in panic. Bear markets die in panic. What I mean by that is, when you look at this right here, this is a bear market, right? We got right there, this was a support, right? That support, we broke below the support, that's a panic. Bear market dies in panic, right? And then bull markets are born on pessimism, right? So this is a pessimism right here. Like, well, what is it really going to happen? What is it really going to happen? I mean, after we're crashing like this, we have financial problems, all these different banks, and these companies got bailed out. Lehman Brothers went bankrupt. I mean, is it really sustainable? Or are we going to going back to cave days? You know what I mean? Like I heard people saying that your dollar is going to be useless. I'm not even kidding. I'm not making this up, guys. I was trading back in 2009 and 2010. People were saying that your dollar is literally going to be worthless. Like people are going to be like using your dollar to like, you know, like warm themselves in a fire. They were saying stuff like this back in 2010, 11, 12. I swear. So bear markets die in panic, and bull markets are born on pessimism. So like a pessimism, right? And then grow on skepticism, right? And this is not coming from me. This is actually comes from Sir John Templeton. If you Google him, he's an old guy, legendary. I read a lot of his books, love his books. But he said, grow on skepticism. This was a skepticism. Do you know why? Because 2012 to 2015, this is known as, right? What is it known as? Known as most hated bull market. Most hated bull market. You guys remember? If you're trading back then, you remember this was known as 2012, 2015 most hated bull market. That there's a lunatic named Mark Faber coming out every year, calling for the market crash. I did 2 videos exposing him and with proof that he's been coming out saying that on CNBC. So I'll actually put those 2 videos at the end of the video on that, you know, that you can put your like other videos at the end of the video. I'll put those videos if you want to watch that. They're quite long. There's a lot of rant, so be aware. But grow on skepticism. This is skepticism phase. Like market is going up and up and up, but it became the most hated bull market. So okay. Let's recap here. Panic, new low, and then what? Pessimism, like, oh my god, we're gonna go back to the cave days. Oh my god, we're gonna go, our dollar is gonna be useless. Oh my god, like spider's gonna go 600. I've heard all these things, right? And then grow on skepticism right here, right? Oh, this is the most hated bull market. It's not sustainable. Crash is coming. Blah blah blah, right? And then mature on optimism. We are on optimism phase. We're on optimism phase. We're right now kind of a mature stage of optimism. And what else? Bull market dies on euphoria. We're not euphoria yet. We're not euphoria yet. We're in optimism phase, right? Euphoria, I think it possibly coming either end of this year, early to mid next year. So I think before we get to euphoria, I think we're gonna see correction, right? So bull markets are born on pessimism, grow on skepticism, which is here, mature on optimism, and die on euphoria. So that's what's going on here. Let's continue on here. I tweeted this out also on the article. I edited, put this article, or my last article is this chart's there if you want to look at it and read more about it. But this is just straight weekly, you know, oscillator here. Just every time it gets that extreme overbought sentiment, and just kind of giving you the, you know, what happened in the past. Back in, you know, when is this? I think it's like 1995 or so. 1995, you can see right there, sideways move, right? Consolidation. We saw, this is a weekly, and so we saw some pullback, got up, pull back again, and then we resume. So that's what happened in 1995. What happened in like a 2004? Well, 2004, we actually stayed in a bull, like stayed in this kind of a like correctional mode for a couple of months, for a few months. And this definitely is a decline. That's what we saw. What happened in 2010? I think 2010 is a worst case scenario. We threw the head and shoulder topping pattern or triple top. This was a neckline. We saw 25% correction very quickly. This was about, you know, it happened. I think this like took about 6 months to build that topping pattern. And it was just like, you know, about a month or so, we saw that fast decline. That was the worst case scenario. And then we're here. We're there. So statistical probability suggests that correction is coming. But in what and how is it gonna come? We don't know. Is it gonna come kind of like 1995, like a sideways move, kind of a consolidate before one higher, or is it gonna come like, you know, what is that? Where does that go? Is it gonna come like 2004, where it's gonna like get into kind of a, you know, like consolidating, like channel, like downside channel, like a big bull flag? But that's kind of quite a bit of pullback. Or is it gonna be like fast, like conventional, like, you know, triple top, head and shoulder, and bam, like 25% correction? How is it gonna do? I don't know. Nobody does. I don't know how it's gonna play out. All I know is it's coming. One of those things are coming, but I don't know exactly how and when. So how do we approach the market? Well, I'm not going long on Spider up here. That's all I'm saying. But there are other markets that you can exploit. There are other sectors that has beaten down a lot. We talked about, I think, last like, you know, like a month ago or so, I told you that I've been long on like XLE and some gold and stuff like that. So you can able to, and I'm watching XLU. It came down a lot, and some stocks from there. And I haven't been putting on any new, fresh, like heavy call positions on anything. I hold everything on my shares, like stocks, common shares. I've been closing out. I also closed another half of IWM calls earlier today, which I'm going to be blogging about this weekend on my journal. So I closed another half, so I'm holding marginal position. So as much as the opportunity I get, as the market rips like this, I've been closing out all, like aggressively, all of my call options that I've been accumulating since here. And you know how I play it. I mean, you've seen my journal post, how I play it. I always like to close a little bit and then close a little bit more. And then when it starts really rip, I start to just really aggressively close it out. So Russell 2000 had quite a heavy position on it. Now I'm down to marginal position with the, another half that I closed out earlier today. So we're pulling back a little bit. We got near today 138.2%, but I'm holding still a little bit. I'll talk about that on my journal post this weekend. So that's my update, you know, and analysis on the market here. Looking at long term, you saw my charts here. So definitely, this is not a level to go full on bull here. The reason why we're seeing this is a panic buying. Most people was not able to participate in 2017 move. First, one is because they probably lost a lot of money trying to short the market in 2016. So they didn't have any money to really invest in 2017. I'm talking about retail traders, most of them. So they really couldn't have to trade, or they're scared. They lost a lot of money in 2016. They're scared that this thing is going to crash down. And then they saw that this thing is happening. They finally cannot deal with this. They cannot wait any longer. They want to feel like they're winning. They want to feel like they're part of this party. And so we're seeing this right here. I think this is sucker's game right here. Can it continue to go higher? Yes. I'm not going to bet on that. But again, at the same time, I told you, I have so many multitude of stocks that I'm currently holding. And I'm actually, I close out some here and there, but I'm holding a lot of them because because those calls, I mean, those shares are my long-term investment stocks. I mean, my Twitter share that I bought at, you know, shares that I bought at 20, I bought pretty good sizable position. I haven't closed any, and I'll be holding through it. Any corrections it might come, because those are long-term investments. But for my position trading call options that I was holding, I've been aggressively closing them out. And just this week, I was busy closing a lot of my, XLE calls, Halliburton that I was holding that, and that's how I've been doing. So I've been raising cash on my options positions, and I'm down to marginal position now, also including IWM. But I'm holding full shares because I am bullish in the primary, major primary term, right? Does that make sense? Just spend 20 minutes kind of giving you good, you know, long-term overview and analysis and forecast and probability of how the market potentially could correct. And obviously, you know, the market is going to reveal itself, how it's going to correct. So we'll take it on a weekly basis. We'll follow up next week. And on some of those charts, I'll continue to look at this and see how they're shaping out. But so yeah, so and I also disclose the fact that how I'm dealing with this market. I am bullish in the long term. Crash is not going to happen, but I am looking for 5 to 7% corrections on S&P. Maybe a little bit more on the Dow and a little bit more on the NASDAQ and a little bit more on semis. But about 5 to 7 on S&P, and we'll see how that plays out. We'll go from there. Gold has been really, what we talked about. Do you remember back in, you know, early December, or, you know, mid-December, I talked about this. You know, this is what it does. What it does is it traps people right there. Support gets below it, and then just goes straight up. Right there, support gets below it, hit, and then goes straight up. That 50% retracement, that's a fib. 50% retracement, precisely found support. We just pretty much went straight up, doing a little bit of consolidation. We're making another high to the upside. It's a very constructive. I really like gold here. I think gold is bottoming. I'll probably write another article maybe this weekend or next week talking about why I think gold has bottomed. I think this is a good time to maybe start investing in gold, maybe miners and silver and some of the related stocks and things. But, you know, I'll write an article why I think that I like the long term and things like that. So one last one, let you guys go. Somebody asked me if I could look at oil. Oil is finally breaking out of this. That is a very constructive look. Monthly chart still looks very hectic here, but looking at just more of an intermediate term perspective though, we got, where is my line? Oh, there. I couldn't find my, so we got, so right there, so that's, we've been consolidating for how long now? You know, 2-3 years or so. We finally cultivated higher high, and we finally getting over this pivot. That was an important pivot. This prior support, prior resistance, we broke out of it. So for me, I don't want to go long here because primary term, looking at more of a primary term perspective, is still kind of a mess. But I think, you know, XLE really did well because of the recent move here, oil move. And so that's a good sign right here, broke above this. See if we can hold that. See if we can hold, I mean, not precisely at that level, like, you know, 6-ish level, like 680, 640. Let's see if we can hold this level if we see a pullback, create a higher low, and then starts to cultivate higher high and higher low there. I think if we can see something like that, I think that oil and energy sector will continue to do well this year. So that's everything. Have a wonderful weekend. Good luck trading next week.